Welcome to INN's coverage of PDAC, which runs online this year from March 8th to 11th. You're about to watch my interview with E.B. Tucker of Metalla Royalty and Streaming and Nova Royalty. It was filmed on February 26th, and it covers the markets for battery metals like nickel and copper, and of course, E.B.'s latest thoughts on gold and silver. We'll be posting all of our PDAC content right here on our YouTube channel, and we encourage you to follow along and enjoy. I'm Charlotte McLeod with the Investing News Network, and here today with me is E.B. Tucker, Director at Metalla Royalty and Streaming and Director at Nova Royalty. Thank you so much for being here online with me today once again.
Thanks for having me, Charlotte.
Of course, and I know that we usually start off by talking about gold and silver, but today I want to begin with copper. Copper is one of the metals Nova Royalty is focused on, and it's really been performing well this year. And even looking back to next year when it was down in March, it's been up since then. Can you briefly outline the factors you see behind copper's upward price momentum?
Well, let's get the numbers exact, because you're spot on with what you're saying. Copper's up 65% from 1 year ago today. It's been a remarkable run, and I don't think people really understand what's driving copper. It's been there's been some people from Goldman out doing interviews on Bloomberg that made a lot of press this week, saying that the copper sector is starved of capital. You know, it hasn't seen investment. It hasn't seen productive capital investment in years. And what they're really saying, which we knew this when we started Nova, which focuses on copper, royalties on copper and nickel projects, big copper and nickel projects, is that there are not a lot of it's not like gold. Gold, you could find 2-3 million ounce deposits. They're all over the place. You can put them in production fairly quickly. You know, you can do this. With copper, these are gigantic, multi-billion dollar, 20, 30, 40-year mine life projects. These are huge undertakings. And so the companies that can do that are the First Quantums of the world, or the Southern Copper, or the Rio. I mean, there's only a list of a certain number of names that can really play in this space because of what it takes to do that. And, of course, when you're talking about $4.25 per pound, you have to mine sometimes billions of pounds of copper to make the project work. So the economics are very different. Now, the other thing that's important to understand, we'll talk about this later with gold, is that copper is not a highly traded, it's mostly traded between users and producers. So you have, companies that are using copper and companies that are producing copper. There's not a tremendous amount of speculation in that market as compared with gold, or especially silver, which earlier this month saw 1.5 times the annual supply traded in one day. And that happened for about 3 days straight. And people scratch their head and they say, well, how is that even possible? Well, it's easy, because you have financial contracts, futures contracts that don't actually ever touch a piece of silver. And those trade on the market. And for about $3 an ounce, you can speculate in that market and play with that. Copper doesn't, they have that, but copper doesn't have that to the same degree. So I think you're going to see copper continue rising. Now, another thing that's really important that people understand here is that copper is the driving metal that's connecting this new wave of energy that's taking. You're hearing about it now, with, of course, with the new administration in the U.S. is talking about it. This is trillions of dollars to transform how we produce and consume and store energy. This is not something that's going to be from now till the summer. This is like from here to 2050. The children and children's children that come along will not know the same energy production, energy grid kind of life that we've grown accustomed to. And that requires a lot of copper. So money is flooding into that sector. And people are not willing to see copper come out of areas that don't respect environmental and social governance standards. Okay, so the reason why the copper price is really moving, in our view, is because people realize that $4 a pound is not sufficient, because what happens is you increase demand and you take away some of that dirtiest, cheapest supply, because investors are now sitting back and saying, we're not okay with destruction of the environment or the social order of some faraway place. in order to get, $3 copper. We're not okay with that. It's a big deal. I mean, this is not going to be something that goes on in a month or two. This is the whole decade.
Right. So it sounds like this is a situation where we have this looming wave of demand coming. We don't have enough supply. You mentioned the price level right now. What would be a fair price for copper to perhaps bring on some new supply to feed that demand?
Well, you look at the investment bankers they're always behind on this stuff. When investment bankers get ahead, you need to be worried, but they're behind now. So Nova Royalty Corp, ticker symbol NOVR, just had its first analyst report from Cantor Fitzgerald come out this week. And I noticed in the report, I mean, you don't get to see these things in advance. I noticed in the report that they used a copper assumption of $3.25. And, copper's over $4 right now. I mean, it was over $4.25 when the report came out. So they're a whole dollar under the price. I mean, almost 25% under the actual market price. And if you look, that price has just been kind of slowly walking straight up, since the pandemic last year. So I think for a company like us, I mean, it's very realistic to use the market price, when you're making decisions, or to even discount the market price. But I think when we talk about this together, we have a really hard time seeing how the price can't migrate up to $5. And these companies remember, I was telling you, they're making 30 or 40 year production decisions. I mean, 30 or 40 years. And so you've of course you're going to be conservative when it comes to putting pen to paper, but you've got to be able to see on the horizon what that price is going to look like. And I don't personally see a lot of projects that work at low copper prices. I just think that's last century. That's the copper mines of our grandparents. Solomon Guggenheim was working on copper mines. I mean, you could fly into Salt Lake Airport and see Bingham Canyon, and you can see it from outer space. If you're on Google Maps right now watching this interview, if you've got Google Maps up, pull it up and look. I mean, you can see that hole from outer space. That's a 100-year hole in the ground. That's back to Guggenheim days. I mean, that's how big copper projects are. And I don't think you're looking at, less than a reasonable increase from here to put something into production like that. I don't think people understand that. And that's where you want a royalty, because a royalty, what we did with Nova was we gathered up royalties on big projects. We don't really want royalties on a junior copper mine. No offense to the junior copper space. They're doing great right now. But what we are looking for, what our preference is royalties on the majors, on Teck and Newmont, and you look at Oz and all these big companies, First Quantum. I mean, these, we just did the Taka deal. That's a huge project. I mean, these are the types of things that get a production decision, and, it's come hell or high water, that thing's happening, because you're talking about half a century of output a lot of times in these projects. That's the type of royalty you want, because what happens is a royalty gives you a way to speculate on higher commodity prices without borrowing money. So we were talking about in the gold and silver market, you can buy futures contracts, you can speculate on higher future prices, which is very expensive. See, when you own a royalty, what happens is that you have exposure to those higher metal prices, but you don't have to keep feeding that trade with ongoing margin payments. That's what's unique about royalties. And so that's what we had in mind when we started buying with Nova. We've done quite a bit. We hope to do more. But the premise is Nova's really the purest copper nickel play out there.
Right. And one more question on copper before we let you move on. It's often called Dr. Copper in that it's considered a bellwether for the economy. So at this moment, what would you say copper's telling us about the economy? Is it all simply about that coming green energy boom that you see?
Yeah, I think the people that talk a lot about copper's ability to read that are people that were in business in the 70s and 80s and maybe in the 90s. But what happened is we had a paradigm shift, and the Federal Reserve now centrally manages economic expectations. And so, you look at what's happened in the U.S. is that you've made it just progressively easier to financialize the economy and to borrow greater and greater sums of money, which means that basically any business works when you do that. I mean, it's really hard to fail nowadays. In fact, the worst business you can be in America the last 20 years is the workout business. And what that means is that when a company defaults, and you go in and you pick apart and that's the worst business you can. It's so rare. I mean, it used to be you had a business cycle. I talk about this in my book about the business cycle. I was alive for some of these business cycles. I was working during some of them. They were terrific opportunities to buy things cheap. But that's not really what happens anymore. You just go from boom to crisis, very quick crisis. Last year's pandemic, I mean, you lost close to a third of the value of some of the world stock markets in a matter of 2 or 3 weeks, and then you're just shooting right back up. So I mean, this is not really a cycle. This is kind of a ongoing boom with the occasional crash off of a cliff and then resume the boom. So what happens is something like copper loses its ability to predict economic output because the numbers are skewed by central bank involvement in the market. And so I think the reality is what you want to study now is the energy, the green energy side of the equation, and the ESG is, I cannot stress enough how interesting ESG is. I mean, there are tens of billions of dollars in ESG funds looking to go to work in the mining business with no idea what to do. And they're trying, and it's going to be a tidal wave in the business. I mean, the mining business has been starved for capital, and this ESG money is just lining up on the sidelines. And so that's something that we've just been very intrigued about that. Not just for our company, but you look around the business and you think, let's figure out who's going to benefit from this money, and let's spend our time focusing on that, because there are companies, believe me, we've done some work, with some that I'm thinking you are going to ride this wave. And when you see a tidal wave coming, Charlotte, what you want to do is grab a surfboard. That's the way you do it. And so there are companies that are going to do that, and that's just going to be very exciting.
Right. Okay, that's great. I want to move on now from copper and over to nickel, which of course is another metal that Nova Royalty is focused on. Nickel, similar to copper, has been on an upward trajectory. For that, I am really wondering, I know there's a lot of excitement about nickel due to the electric vehicle story. So this price rise that we've seen, is that based on current fundamentals, or is there some excitement about future potential built into that? What do you think?
Yeah, it's a perfect question, because if you ask the investment bankers, they talk about stainless steel demand and refrigerators and all this stuff, and that's just not what we see at all. I mean, the new NCM 811 battery that's in production now, and some of the new iterations of batteries to follow that, are very nickel heavy. And nickel is not, there's only really one kind of nickel that trades, the LME. They don't really split it. It's kind of with oil, for example, there's all these different types of oil, and it's changed by weight. But you look at nickel, and it's like you have, sulfide nickel, you have all these different nickels that are used in different things. And you can't really just so easily trade them, one for the other. And so nickel's a market that is probably going to see a sustained rise until it gets more eyeballs. I mean, it's just, even if you read the major investment banks, if you read their nickel reports, it's amazing. Like, it's just not something people have really focused on. They're very technical. They're looking at these things in great detail. It's not like they're making errors. It's just that I think what you need to focus on is Elon Musk came out last summer and said, I'll give a contract to a nickel miner that can produce, battery grade nickel for me over the long term in a green process. And he did that twice. It's very interesting. It made major headlines twice. And that tells you something. So that's what we saw. And the other problem is that about half the nickel supply comes out of Russia and about a quarter Indonesia, and then you start chopping it up around the world. And so what we did at Metalla is at Nova Royalty is we looked at Dumont, which is a Canadian, project. I'm not going to say it's shovel ready, but I mean, it's pretty good shape, and it's close to infrastructure. It's got clean ownership. It's really big. I think it's in a province that is mining friendly. It checks a lot of the boxes, So we did that deal, and then we did Twin Metals in the U.S. And so we focused on on domestic and North American nickel assets, because we feel like what's going to happen is that countries are going to have protectionist views of their production. These essential metals, we don't feel like they're going to produce and just distribute worldwide. We feel like they're going to say, wait a second, I mean, we're not going to take this production, put it in the world market, and then buy it back at higher prices. We're just going to keep it. And so what's going to happen there is that it's going to favor, domestic or close to domestic production. So nickel is very interesting. I mean, we have a big investor that was trying to put on a speculative nickel trade, and he had a hard time doing it. It's really hard to be involved in the futures market for nickel. And what happens is it's just end users. I mean, it used to be General Motors phones up Glencore and says, we'll need this many tons of nickel this year, and they just fetch it for them and charge them a fee. So that's the market. I mean, it's amazing. Like, so this battery demand is all new. It's all new. It's brand new demand. It's just a totally new source of demand. And the only thing I can equate it to is, look at with oil. It's a lot like oil in the early days. I mean, first oil they were using in the U.S. was for lamps. It's lamp oil. So I mean, it started out with lamp oil, and then automobile. I mean, it just goes from there, right? And it becomes this kind of ubiquitous fuel. So nickel, the key to nickel is you've got to store all this green energy. I mean, you have to store it. Los Angeles produces a lot of solar power. It'll fry out the grid if they don't store it. It's a big problem. So I mean, this is all coming, and I just don't think people know how to get involved here. And we think a royalty is the way to get involved. So because what happens is you get the upside, and you don't have to do anything in the market. You don't have to, be trading in and out of the market and worrying about mining, cost and problems. You can just have upside exposure to the metal, and that's what you want.
All right. One more point on nickel. You mentioned Elon Musk and his tweets about needing more nickel supply. I think his latest tweet, which was sometime in the last week or few days, was talking about supply worries and saying that the company wants to now shift to an iron cathode for standard range cars, which is obviously not all of their cars. But,
Sure.
how close attention should we be paying to comments like that from somebody
It's
who
important.
definitely has the ability?
Yeah, It's important. So, I mean, and you have, redox flow batteries and the vanadium formulations. All these things are very important. And that battery he's talking about is a battery that is, going to have some applications in the business. But here's the thing. I think this is what surprised me. You have to remember something. When I got involved with Nova, I invested in the company's early rounds. It's the same kind of people as Metalla. We put this together. So, I mean, we met together and talked about the opportunity, and we all kind of helped each other figure out, how big is the opportunity? How do we take advantage of it? How do we fund it? We did all this at the beginning. And the thing that surprised me most was when I learned that a decision to use something like the 811 NCM battery that's in most of the electric vehicles that you see riding around, that is a huge CapEx decision. So I mean, it requires building, Panasonic or LG or Tesla, whoever, building a gigantic amount of production capacity to make that battery. And so while there definitely will be other types of batteries that are tested, and remember, if you can find a battery that is safer and it stores the energy longer and it lasts longer, it's definitely going to happen. Okay. But the thing is that you do not change the type of battery, in 6 months or something. I mean, we're talking about decades. This is the current battery that's heavy on nickel and light on cobalt. People don't realize that, it's got much more nickel than the previous one and much less cobalt. That was something that was in development for a long time. That was not, they came up with it in July and produced it in December. I mean, it's not like that. This is something that nickel is going to see high demand for a number of years, and there will be other things, and I'm sure there'll be opportunities to invest in some of those other things, which we'll be looking. But we were doing this when nickel was 5, just to give you some point of reference. And it's like almost 9 now, and it's just finally getting attention at 9. So there will be others, but you know, as an investor, what you want to do is you want to play that cycle. You know, if there's a new technology that's super early, I mean, you can start looking at it, but nickel is just, I mean, first gear. You know, so what you want to do is you want to ride that trend.
Yeah, absolutely. Great point. You cannot make those changes all at once. So I think now we've come to the part of the interview where we can talk a little bit about gold. How are you feeling about gold this year? I know a lot of people have more muted expectations for 2021. What are your thoughts? What price are you looking for this year?
Yeah, so I've got my Krugerrand here is on my desk. You know, it makes a nice paperweight. But I was looking today. The gold price is up 5% from a year ago, which is just really a surprise to everybody in the industry. Silver's up 47%. So I mean, you know, silver's done 9 times as of today. Going back a year, silver's done 9 times better than gold. I think what the last couple of weeks have shown us, I mean, and if you look, I mean, we're active in the futures market, monitoring the price all the time. The price is set by the futures market. So what's fascinating to us is if you want an ounce of gold, you're going to pay about a 10% premium. You know, if it's an American Eagle. I mean, of course, you can find some coins are less, and the Krugerrand is less, but the Eagle is kind of one of the premier coins. So last I checked, last week, 10%. And so what that's like, Charlotte, is it's like going into the car dealership with your Toyota Camry, and you think it's worth 15 grand, and the dealer gives you 5 for it. And he says, no, the price is 5. You say, well, it says here the price is 15. I know, but we're going to give you 5. Well, the price is 15, but we're going to give you 5. And you can't make sense of this. It doesn't make any sense. Price of gold is 17, you know, and a quarter or something today. And you want to get an ounce of it, you're going to pay much closer to 2,000. And then you're going to wait 4 to 8 weeks to get it. And so people say, well, how is that possible? Well, what happens is that the price is set by the futures market. And, you know, you've got at any given time, the May contract, for example, you know, you've got 100 and something thousand contracts outstanding at 100 ounces of contract. I mean, you start getting into, you know, half the annual supply or something is sitting, you know, in that contract and turning over, you know, almost daily. And you say, well, how can that be? Well, I mean, that market is very powerful. And I don't think the efforts of the Federal Reserve and the government look very good when the gold price is running away. You know, you figure there's $1 trillion worth of Bitcoin. That where would that $1 trillion be if it wasn't in Bitcoin? It would probably some of it would be in gold. I don't think a lot of it would be in Dogecoin, but I think maybe Bitcoin has taken a lot of it from the gold market, and I think that's okay. It's fine because gold and Bitcoin are not the same thing. You know, people say, is Bitcoin digital gold? No, because gold is not physical Bitcoin. So it's not interchangeable. These are very different things. And there's, you know, each has its merits, but, you know, we're in the gold business and we think that this Krugerrand right here is real wealth. You know, this is real wealth that is sitting on my desk and, you know, having a thumb drive, you know, with your private encrypted Bitcoin key, it has its advantages, but it's different from having this is analog wealth, and something to be said for that. And so I think people are making a mistake right now, you know, to look at those two markets as interchangeable. They're not. They're separate. You know, we have opinions about both. I mean, people read my book. They know that I have a very clear opinion about Bitcoin, where it came from, where it's going, and I think people, they don't take any time to read that, and then they just kind of look at whatever's scrolling across Yahoo Finance and then make decisions and make a bunch of comments. But, you know, we're headed towards a scenario where, you know, ultimately FedCoin is your currency. That's going to be the currency, and its ultimate control for the government and the central bank of every single dollar currency unit, we're going to call it, in existence. And, you know, when that happens, I think people look back and they'll say, maybe it would have been reasonable to have a few ounces of gold. I mean, could it really hurt? You know, could it really hurt? I mean, it's not something you speculate on. You're not, people get caught up on the gold price and I'm thinking, what's the big deal? You know, what are you trying to do? You're trying to make 30% on the gold price. I mean, what's the point? You know, Metalla was up 128% last year. You know, the gold royalty business is much better than owning gold. And people say, well, you're the why gold, why now guy, but my book is called The War Against Your Wealth and How to Win It. It's not really, I mean, it's about gold, but it's not really about, it's about your life. It's about your wealth. It's about, what are you doing? You know, what and I in the book, you know, you don't find an argument for going out and spending all your money on physical gold. It doesn't make any sense. I mean, it's kind of like if you had a $1 million house with $20 million worth of fire insurance. I mean, what doesn't make any sense. You know, that's not the way we look at it. You know, gold is an anchor of your personal wealth. You know, it's analog wealth. It's a safety net. And it's not a place to worry about gambling on the next price rise. That said, what we've seen so far this year has been pretty dramatic, you know, with the pullback in gold. At the same time, Barrick Gold and Newmont, all these companies are doing dividends and special dividends. And, you know, most of them paid off their debt. I mean, Barrick has no net debt. It's kind of amazing. I mean, Agnico, you know, all these guys are making a lot of money and they're paying it back to shareholders. And then, you know, you contrast that with bloated companies in the mainstream that have no earnings and have tons of debt, you know, no EBITDA. It's a very strange time. So I think people need to look and say, why are all the commodities screaming higher and gold's not? You know, and there probably is an effort to, you know, to realize that if the gold price is screaming higher, it does not bode well for the appearance of the government's control over the money. So it's very important. I mean, gold's serious. It's not like copper. Copper's about, you know, digging out of the ground and using it to do stuff. Gold's money. It's very different. So in the money game, you know, there's some, you need to recognize that's the case. And I think the last thing I'll say is think about all this stuff, like read my book, have an imagination, and think to yourself, what's going to happen ultimately? Probably what's going to happen one day is you turn on the news on a Sunday night and gold's up dramatically and it just opens higher, and then, you know, it's hard to get, or you can't get it, or you can't own it anymore. I mean, this is probably what ends up happening. You know, so I think now's the time to think about your wealth, you know, not to guess about the gold price. It's time to think about your wealth. What are you doing about it? What do you want to do about it? You know, what kind of life do you want? I mean, I don't think sitting with a bunch of cash when interest rates are negative, you know, or gambling on altcoins or buying penny stocks or something. I mean, I don't think these are very good plans with all your money. I mean, certainly there's a place for all those things, right? But because we're in a speculative boom, it could go on for quite some time. It's too hard to know. But I think that's not a conversation about wealth, you know. So I think it's time to do that thinking.
Right. So for this year, less focus on price of gold, more focus on owning gold and being prepared. I think that ties into what I wanted to ask you about silver, which is another metal where people are very focused on the price, especially I think for the past month or so since we saw this silver squeeze activity going on. Would you say the same for silver? Should we be looking for a price target?
Yeah, okay, but let's be fair, because I mean, we do think gold will go to $2,500. We really do. So I mean, we're happy to be on record with that. I mean, we're surprised that it hasn't kicked back into gear now, considering what's going on. I mean, yesterday interest rates went to 160 in the U.S., 1.6 in the U.S., and that they were 1% earlier last month. That's a massive move. That's going to cause serious problems with some hedge funds and traders that were overexposed and underprotected. So that's a big deal. So, I mean, we expect that. We expect silver to go to 50. We think it breaks through 30, then it probably goes up to 40 pretty fast. I think it's 50 is a triple top. So, I mean, these things do matter. I mean, of course, we look at the price and we make those calls, and we're happy to be on the record with those calls. But I think people need to ask themselves, what's the point? I mean, if you went out and bought a bunch of silver coins, good luck. I mean, the U.S. Eagles are, $8 or $9 over, to get an eagle, and that's buying them in size. Okay, so you're already going to pay like $35 to get an eagle, U.S. dollars. Okay, so good luck getting it. But how are you going to make money? I mean, I've got a pretty sizable, derivatives position on silver, betting it to go higher, and I've had that since April of last year, and have made several adjustments to it. We're constantly kind of, it's like pruning a bonsai tree, right? You're just constantly making a little adjustment here and there because things change. And like I say, the price is up, 47% from a year ago. So that's something you have to stay on top of. But the Reddit people are right. I mean, the silver is not there. I mean, if you don't believe it, go buy 500 ounces and watch what the broker tells you. In my book, in part 3, I have the phone number of a couple of brokers. Call them up. Tell them you read the book. They'll know who you are. I know all these people, and tell them you need some silver and see what they tell you. Tell them you want some 1,000-ounce bars and see how long you have to wait for them. It's not a very liquid scenario. So the Reddit people were right. So it just shows you, Charlotte, you can be right and not make money. So do you want to be right, or do you want to make money? I mean, we want to make money, right? So I mean, we don't let ideological hangups get in the way of that. I'm super powerful on gold, and we've still, in the pullback since August, Metalla has still performed very, very well. And it's a testament to the benefits of owning royalties. You get that same exposure. You just have more liquidity and diversification, and you get rid of single asset risk. I mean, when people are hung up, I just say, well, what are you trying to do? It's like, are you trying to guess the weight of a horse at the state fair or something? I mean, why don't you try to make some money? I mean, this is a huge, once in a generation bull market. Huge. This is a huge commodity cycle bull market. And you're hung up on guessing the price of an ounce of gold. And okay, I mean, at least your head's in the right place, but this is the type of scenario that you look back on and you say, I should have bought a number of things, and I should have bought them hand over fist every time there was weakness. If Rolexes are 50% off, you're excited. But if stocks are 50% off, you're depressed. I don't get it. It doesn't make any sense. So I think people need to center themselves and say, what are we, the metals will hit these targets. They'll hit these targets. There's a lot of serious stuff going on. The US had a $3.1 trillion deficit last year. It's taken on as much debt as it could possibly get. Now it's 1.6% 10-year, and inflation rate means that your real return's negative. That means, so if the US has a negative, call it 1% rate of return on a real basis, that means that if you wait long enough, the debt extinguishes itself. You want to be a part of that? That's beach erosion. All right. So that's what's going on. You see that and you think, well, that's great for the gold price. That's right. But the gold price is priced by the paper market. Okay. So if something is being held down, what do? You go buy it. Because you can't hold it down forever. Cartels don't work. They don't work. They never work. They never worked in the history of anything. They always end up attacking each other and getting too greedy, and it doesn't work. So now this is the time when all the fundamentals for gold are great, and people are scratching their head as to what's going on. Gold, royalty companies, maybe some of the big miners. This is the trade.
Okay, well, thank you for that clarification. Those are some great points, great questions for people to be asking themselves. That's all I have for you today, unless there's anything else you want to leave us with.
That's it. We've got Metalla Royalty, MTA, in the US and Canada, and Nova Royalty, NOVR, on the TSXV, and trades in the US as well. And if you missed, FedCoin and what's happening with Bitcoin, where it came from, where it's going, and how to do this with gold, get a copy of my book, Why Gold, Why Now. It's on Amazon, Audible, Kindle. You can get it practically anywhere, North America and around the world. And we answer a lot of those questions. And books meant to help you in the war against your wealth, which is very serious. And I think people that read it realize a lot of these things that are happening, handing out money to people, universal basic income, negative interest rates. We talked about all that, and we laid it out like dominoes. And there's more dominoes to come, Charlotte.
All right. Well, thank you so much, as always, for coming on. Great to hear from you. Really appreciate it.
Okay. Talk to you soon.
Yep. And once again, I'm Charlotte McLeod with the Investing News Network, and this is EB Tucker.